This will be available as an edited podcast on all of your favorite platforms, Spotify, Apple, so on and so forth. Any kind of help there in reviewing and spreading the word around this effort is always much appreciated. I run these daily spaces and live streams, very much different from what you see in the rest of Twitter. Try to make it more like a crowdsourced conversation. I'm very excited actually for this conversation. Usually when I reach out to various guests, I'm not doing too much due diligence at the beginning, just trusting that those that I follow are following others that are interesting. Nick's got a hell of a story, hell of a background. We can relate to everything that's going on in the crypto space. With all that said, my name is Michael Gayed, publisher of the Lead Lag Report. Joining me for the hour is Mr. Nick Leeson, who I don't know if it's a good thing or a bad thing, but it is named the Rogue Trader, which we'll get into here, Nick. But for those who aren't familiar with your background, spend a little time here talking about who you are, how'd you get involved in markets, and what exactly happened in the mid-90s.
Okay, well, look, it's a pleasure to be with you today, Michael. I left school at the age of 18. I grew up in a small town called Watford, which is just on the outskirts of London, really, and started work in the City of London aged 18. It was around the Big Bang era, or slightly before the Big Bang era, when they were deregulating all of the banks and the City of London. And there was a lot of change, and there was also a lot of opportunity. So somebody from my neck of the woods wouldn't necessarily have ended up in the city, but that was the time, and that's what happened to me. So I worked for a bank called Coutts and Company, which is the Queen's Bank. Worked for them for a couple of years, moved on to Morgan Stanley, worked for Morgan Stanley for a couple of years in London, did a bit of time in Japan, working for Morgan Stanley as well. And then I was headhunted to one of the oldest merchant banks in England, Barings. They were called Baring Brothers. The part that I was working for was called Baring Securities, and they were very good and very well known for being very aggressive and expanding massively into the tiger economies out in Southeast Asia. So after working in London for a short period of time, I was moved to Hong Kong. I was in Hong Kong for about a month, really didn't enjoy my time there, and then was moved to Jakarta in Indonesia, where I spent about a year solving a few problems that the bank had down there. Moved back to London to work in a business development area. My background throughout this time had been futures and options, so derivatives products, and then was offered the opportunity to move to Singapore to run the futures and options trading part of the business for Barings in Singapore. And up until that point, which was the age of 25, I'd been very successful. Everything that I touched had worked very, very well. And then arriving in Singapore, things started to go wrong fairly quickly, and made some really stupid decisions, hid some early losses into an account that became famously, or is famous as called the 5/8 account, which is where I concealed some of the speculative risk taking that I was undertaking during that time. And over a period of about slightly less than 3 years, ran up £862 million worth of losses in the operation in Singapore, which ultimately led to the collapse of a 233-year-old merchant bank. I fled Singapore on the 23rd of February 1995, aged 28, and was trying obviously to make my way back to the UK or back to Europe at least. I was arrested in Frankfurt, Germany by the German border police, and eventually was extradited back to Singapore after about 8 or 9 months in Germany, where I was eventually sentenced to 6.5 years in prison in Singapore, and was released on the 3rd of July 1999. Not something that I'm proud of. I think, I often say that if I'm to put into a genuine context what that period of my life really meant to me, or still means to me. I was somebody that always wanted success. However much I got, I always wanted more. And through those early years, I was very, very successful. That period of my life will always be the one that I'm remembered for, though, unfortunately, and that will always be the most embarrassing period of my life, because it's the complete opposite of what I wanted to achieve. So 1999, I returned to the UK, and I've had to slowly rebuild my life since that time. So I do a lot of different things, I suppose. I worked for a football club, or I ran a football club for a short period of time. When I moved to Ireland, where I live now, I still trade, and I also do a lot. And since my release in 1999, I've done a lot of talking at conferences. So either as a keynote speaker, I've done some after dinner speaking as well. So those are the sort of things that I get more involved in now. So for the last 23 years, I suppose it is, after dinner speaking and talking at conferences has probably been my main source of income through that period. So I'd like to think that I'm quite sought after, and I'm as busy now as I was 23 years ago in that regard. There was a movie made of my life, Rogue Trader, which you mentioned, which isn't widely available at the moment. Ewan McGregor played me, but there's a couple of competing companies looking to make an 8-part series at the moment, which will probably reach a younger, wider audience if that comes to fruition over the next 12 months or so. So that's enough from me, I'd say.
Yeah, no, that's good. And again, everybody that's on this Twitter space, you'll notice that this is streaming from my account. Nick's doing this via my computer. We're talking that way, so I apologize for the sound quality. But again, if you want to come up and ask questions, don't hesitate. All right, so Nick, take us through a little bit, sort of to the extent that you're comfortable, the specifics of the buildup of the losses. What were the instruments that you using? What were some of the bets that you were trying to take that got to that large number that ultimately took down Barings?
Yeah, well, I mean, it was pretty much all Nikkei 225, so the Japanese stock market. So, I moved to Singapore in April 1992. So the Japanese markets were probably trading at their all-time high around that particular time. So the Nikkei 225 would have been 39,900, around those sort of levels. It didn't quite touch 40,000, but it was trading at those sort of price points around that time. It was an open outcry market, so similar to the sort of things that you see, or you did used to see. I think you still see them in Chicago, but that's the only place now really where they have an open outcry market. It's very much a secondary market to the Osaka Stock Exchange, which is where the main Japanese business was transacted. So for me, during that time, and for people of a similar age, it was an exchange that was looking for market share. It was very much developing, and if you're looking at those sort of things and you're trying to work out whether you want to do business there or not, the things that you look at are the daily volume, the open interest, and those are probably the two main indicators. So the volume wasn't great in the Nikkei 225 contract. It was probably trading about 2,000 contracts a day. What happened in Japan is the market started to sell off quite aggressively. So there were a lot of circuit breakers that started kicking in Japan, which closed the market. As soon as the circuit breakers kicked in, I think it was 700 sellers you needed. It was quite small. The market would then close for the day. So a lot of the business shifted to Singapore, where they didn't have the same constraints. So the volume very quickly rose from 2,000 contracts a day to 20,000 contracts a day. And the exchange wasn't really ready for it, didn't have the quality of people, the number of people in place to make sure that everything was going according to plan. The settlement systems weren't good. If you were trading on Life or the CME at the time, there was the rule would be that you match a trade within 30 minutes, which sounds like an awful long period of time these days, but because of the breakdowns that they were having in Singapore at the time, you weren't able to input your trade tickets. So sometimes it was taking 12, 13, 14 hours to match a trade, which is just ridiculous. And it was during one of those occasions that we'd realized, one of the girls on the trading floor who shouldn't have been picking up the phones, who shouldn't have been placing orders. Everything's done with hand signals. And if you're not adept with the hand signals, you may, if you want to buy something, your palm is facing towards you. If you wanted to sell something, your palm is facing away from you. The numbers are shown on your face, and the quantities, the numbers are shown in front of you. The quantities are shown on your face. And one of the girls got a little bit confused. The order went in the wrong way. And we had a trade that we needed to make good to a client. Wasn't until about 2 or 3 o'clock in the morning that we realized this. And in making it good to the client, the firm effectively had a position. And that was the initial trade that went into the 5/8 account. The very next morning, I knew what the process was. You go and refer this up the line to the next level of management within the organization. The very next morning, I was in the office at 7:30. I did that and was asked to refer it back to the head of trading in London, who wasn't going to be awake for another 7 hours or so because of the time difference. And I didn't do that. I took it upon myself that the market would come back to that level during the day and I'd be able to close the trade and nobody would be any the wiser. It was very ambitious, very driven by being successful. And what I didn't want to do was highlight the fact that something was going wrong. So I didn't refer it to London. That initial loss was reasonably small, probably in the $10,000 to $20,000 bracket. I was now more complicit in the error than I had been a few hours earlier. And that's really how that stone started to roll, if you like, in terms of getting bigger and gathering speed as it went downhill. And so each day I'd start off with a position that I was trying to unwind, try and get back to a break-even point, and just compounded some initially poor decisions with even worse decisions. And over a period of time, that loss started to escalate. So by the end of 1992, September 1992, which was the year end, the loss was $5 million. By May of 93, the loss was $20 million. In May of 1993, I was selling options or selling straddles during this period as well, because they'd just been introduced on the exchange. And in May of 1993, the options expired at the most perfect level and all of the losses were taken away. And I had the opposite problem. I had a profit that I needed to get rid of, which was a lot easier to do. But the problem really was that, during that previous period, I had probably 15 people working for me on the trading floor at the time. They'd never been admonished. They'd never been reprimanded. Every time they made an error, it went into the illegal 5/8 account. And they went back into work on the Monday, again, without any admonishment, without any reprimand from me. And they made errors again. And, sometimes it might be that you get an order to buy 500 lots at market and you get the tickets back and you've got 510 or 520 because their maths wasn't particularly good or something of that ilk, or maybe a trade didn't match. And those trades on the Monday morning very stupidly went back into the 5/8 account. And I think what had happened is, and this is a lot of this is with retrospect rather than understanding at the time, but I think I'd managed to solve the situation once. I probably thought at the time, I'll solve it again. And then from that point in May of 1993, the losses just got bigger and bigger and bigger. The market really didn't have the capacity to unwind too much of a position. And I think very quickly my position became bigger than the market, if you like, in terms of, I might, and I don't know how many of the people talking are from a trading or listening are from a trading background, but, to give you an example of the Nikkei 225 option pit, there were 2 or 3 American market makers: Chicago Research and Trading, First Continental, Spear Leeds Kellogg is probably the depth of the market making community. And, I had something like 100,000 options that I was short over this period. And if I went into the market and I looked for a price, they would skew the price very heavily against me. They knew I was more than likely a buyer. So if the fair value of an option was 15, they'd be 16 bid at 20, and then I'd look for size, and they'd have 20 lots available, and I maybe needed to buy 20,000. So my position was, just accelerating so big and so quickly that it was very difficult, I would say impossible, to unwind. And I don't think that really dawned on me that quickly. But over time, as my position continued to increase, the market was still falling quite aggressively. The Nikkei 225, there was an earthquake in Kobe at the beginning of 1995, which accelerated the move lower. Personally, I don't think it was the reason for the collapse. I think by that stage, it was the size of the position that I was running that was increasing dynamically that led to the collapse of the bank.
I mean, it sounds to me like it's a story. You can argue that's a little bit as old as time. You're trying to get out of a drawdown, out of a loss. You use increasingly more leverage to try to do so. The losses get worse. You take on more derivatives, and then you become bigger than the market. And then then people try to game your positions. I'm curious if you think that, just bringing that to today, the advent of all of this 0 days to expiration options trading, all the derivatives that have gotten so large, if that leverage is as dangerous as it was back then simply because there's more regulatory control, or is there maybe a tail event that the entire globe, you could argue, could go through similar to what you went through during that period in the 90s?
Yeah, no, look, I think everything is a lot better now than it was back in the 90s. Just giving you a little further insight into me and, some of the reasons for some of my decision making during that time. I, as much as I talk about success, I also had a huge fear of failure. So, we all had fairly big egos back in the 90s, and people were great at celebrating success, but we didn't talk about failure. We didn't talk about mental health issues, and all those sort of things have improved fantastically around the side of everything that we're going to talk about during this particular session. But yeah, I mean, I was struggling. I was drinking a lot during that period and postponing, as much as I was postponing the realization of my own failure, I was postponing the realization of those losses as well, so that I didn't have to deal with it. And that was a huge part of everything that happened during that period. Just to now answer the point that you were making, yeah, look, I think everything is far better now than it was back in the 90s. The number of people who work in compliance, the number of people who work in risk management, the level of understanding, the quality of people that work in those roles has improved massively since that time. And it often gets said that my case was the start of that, and maybe it was, because Barings was a collapse really that should never have happened. But if you fast forward a few years from there, there've been far too many. So the industry, I think what happens is there's a certain amount of scapegoating that goes on, which is completely accurate, right? You pour the attention on one individual, which then allows the banks and all the system to get their house in order and say, okay, well, it did happen, but now we've done this. And whether you think about Jerome Kerviel or Bruno Ixil, Kwaku Adebole, who were the road traders, and there've been a number in the US as well. Can't remember his name at the moment. There was a Japanese guy at Daiwa in New York as well around the same time, and Mr. Hamanaka, who was Mr. Copper at the time as well. So this was something that, if I look back on those times, I think after that Big Bang era and this period of deregulation, banks moved at different speeds in terms of understanding risk and compliance and how much attention they put, and money and investment they put on those areas during that particular time. And it's all caught up now, or to a large degree it has. And when you see a scandal now, the majority of them are in those niche parts of the industry that still haven't been focused on. So I'm thinking of Archegos Capital, maybe 15 to 18 months ago, which happened in a family firm in the US. And then more recently, you've got this collapse of FTX and the probably more spectacular than me fall from grace of Sam Bankman-Fried. You know, mine was spectacular, but I think this one is potentially even more spectacular. And you know, the thing that I find difficult to understand with this latest episode in the crypto space is that there are so many lessons that could, should, and should really have been learned from what's gone on in mainstream banking. I think, you know, like I'm 55 these days, so I get described as old and decrepit with my views on what's going on in the world of finance. But, you know, I think there was so much that the crypto space could have taken from mainstream banking, but because it, you know, they wanted to make sure it was all decentralized, it was all new and modern and different, they didn't do that. And I think they missed an opportunity. I mean, everything that's potentially going wrong in the crypto space at the moment has gone wrong in mainstream banking previously, and a little bit more of attention should have been focused on that, in my opinion. So, yeah, all of those areas are far better than they were. I don't think derivatives are, you know, the most evil thing in the world. If you've got the systems, you controls, the processes, and the degree of understanding that you need in place, then they work well. But if you get people who are over leveraging, chasing the market, as I did, gambling or doubling up, as I did during that period, and as I think you'll see that Bankman-Fried did during this latest episode, then you're going to have really, really big problems, because the degree of leverage gets very, very quickly out of control.
I want to tie that into, before bringing in some of the audience, a discussion around intent. Sort of, you know, because I think it's, anybody that's looked at your story, I think it's very clear. You obviously didn't intend for this to happen. You were trying to simply come out of it and help others. And there were obviously internal controls that weren't in place, right, to prevent some of this, right? But part of intent when you're involved in something like this is sort of an argument of self-deception, right? And I want to relate that to SBF for a moment, because it does seem to me that he really doesn't believe, maybe there's a degree of self-deception there, that he did anything wrong, as if the intent wasn't there. I'm curious, just given your understanding of things, the way you kind of tracked what's gone on, do you believe that there was legitimate intent to defraud investors and everybody that was involved?
Yeah, it's a difficult one. I think the only person who knows that answer at the moment is Bankman-Fried, right? You know, I think when you see episodes such as mine and such as Kerviel and the like, you know, the first thing is you want to deny what's happened, and that's because you're denying your own failure. And I think your own failure is a very difficult thing to come to terms with. And it took me a long time. And I think Bankman-Fried is in that phase at the moment. He's also very scared because he has a very uncertain future. I think at this point he's probably still in prison in the Bahamas. He's going to be extradited to the US, and, you know, as far as I'm concerned, and, you know, I'm not going to get into a discussion about whether this is right or not, but the US imposes the most heavy penalties for wire fraud and the like. When I look at the case, and, you know, I don't want to impose or, you know, try to color this in any way, shape or form. Like in my case, and I wasn't trying to help others, right? I was trying to solve my own problem. And the reason why I kept going is that you keep seeing these small positives or these slight signs that you're going to be able to solve it. So for me, the situation was always about avoiding highlighting my own failure. And you'd get to stages where you'd make a lot of money back. Like at the end of 1994, the options positions that I had were in huge profit, but I couldn't unwind them because the market didn't have the capacity to allow me to unwind them. The market makers were all going to front run me. They were going to squeeze me as heavily as they could. And, you know, what potential profit there was would probably extinguish fairly quickly. But your question was about intent. And, you know, my intent, had I wanted to steal money, I could have stolen any amount of money I wanted. I could have moved it to Lebuan, which is a an offshore center in Southeast Asia that probably not a lot of people know about. I could have done some back-to-back trades through maybe one of the Chicago exchanges. Because believe you me, I've thought about this post-event and thought, well, maybe that's what I should have done. But no, it was a forlorn attempt to try and get myself back to a situation where I could move on from it and maybe move away from it. And one of the things that's happening at the same time is that, you get involved in this success story that is wrong and there's no basis for it. But there are hundreds, possibly thousands, possibly millions in the case of Sam Bankman-Fried who believe in the success story. So you start getting into all of these different relationships that, are wrong. It's a tissue of lies, but which is the bigger evil? To come clean, which shouldn't be the bigger evil, but it becomes the thing that you can't do. You can't enunciate what's happening to you. And, you continue to make bad decisions based on keeping all of those status relationships. The one question I have, and potentially the one difference with Sam Bankman-Fried, and I think where the focus will go to when they're looking at his case, he is obviously drawing a lot of people in to invest in the business, to move their currency, to move their cryptocurrencies to the new exchange. He's paying, I saw a story there the other day that he paid Kevin O'Leary something like $15 million to be a promoter of the exchange or an advisor to the exchange. So he was using a lot of money to substantiate that myth and to attract people to the business. And I think that's where his intent was massively criminal, because it was built on a house of cards. And I still find it strange when you see people like Kevin O'Leary describing him as the best ever trader. He's going to end up being the worst ever trader he's going to surpass me, right? Because he's going to have lost a lot more money. And I think, he used money to certainly curry favors politically. He used money to bring people into the business that were then promoting something which was a pure house of cards. And I think that's where the similarities to Bernie Madoff come from as well. So I get the question over intent, and I'm rambling a bit. I know that, and I would always say in my own case there wasn't criminal intent, but it is a crime, and you can't get away from that. And Bankman-Fried can't get away from that. So you can argue intent many different ways, and I certainly would be able to argue intent from my own perspective. I think in Bankman-Fried's case, he's completely deluded in that regard. Why did he pay O'Leary $15 million to promote this business? Why did he make political donations in the magnitude that he did if he wasn't deceiving people?
For the remaining minutes, let me just reset the room for everybody here. Please, if you are interested, follow the Nick Leeson on Twitter. Again, I'm streaming this through my computer, given some issues with Twitter on Nick's end. This will be an edited podcast under that Lead Lag Live banner. And again, if any of you want to come up and ask questions, make sure you follow me, check your DMs, we'll coordinate, and I'm happy to bring you up. So with that said, let me get some of the audience in here for a couple of questions.
So to answer the first part of your question first, success was and still is to a certain degree my motivation. And I think you get carried away on that wave of success and you build status relationships. So Sam Bankman-Fried probably came from, I don't know his complete background, so I'm not going to try and speculate, but he very much propelled himself up the personality, the celebrity, the political ladder very, very quickly. And during all of that time, status becomes very, very important. So, I talk about success. I wrote a book with a well-known psychologist a number of years ago, and he ended the first chapter, which is about status, by making a comment. Okay, and the comment was, when an immature person has status, they will do anything, absolutely anything, to protect it. And that's what I did, right? I was protecting my status relationships, both at home, both with the people that you circulated with on the trading floor, with the people that I worked for. They all viewed me as this whiz kid that was making an awful lot of money for the firm. And that catapulted me to a level that I hadn't really known before. And it's very difficult to let go. And I think, that's a very short insight into what was happening to me. I think you can magnify that probably by 100 with what was going on with Bankman-Fried. He's donating money to political parties. He's talking to, some serious people. He's constantly on social media. Social media didn't really exist in my day. And that's really pushing him to another level that is just inflating his ego beyond control. And, he might go home at night and look in the mirror and really not like the ego that's starting to surround him and all of the status that's surrounding him. But he's also not going to let it go and start to break it down. So I think that's a big part. And like you say, it was fast, and it was, I think there was a part of the crypto world that loved him. There was a part that hated him, or was certainly curious about him, asked a lot of questions. And that was also part of what was going on. And the industry is just so big and has been so media friendly over the last 5 years or so that it's catapulted him to a completely different level. The comment that you made about, there's never smoke without fire. I think that was the comment that you made. I was at a crypto conference in Dubai about 10 days ago, and I was speaking to some of the people there, and there are concerns about other companies as well. I think Tether was one that was mentioned. Binance certainly was mentioned as well. But they just seem to, I saw the CEO of Binance on CNBC maybe 3 weeks ago, and they were talking about some of the simple reconciliations that used to be done but aren't being done anymore, but they will then start to do again over the next 2 weeks. Like, this is banking 101, right? Simple reconciliations that aren't being done. I think it's John Ray, the guy who's looking after FTX now, he's described the situation that he's found within that organization as probably the worst governance and worst process-driven organization that he's ever seen. And this is the guy who investigated Enron after the collapse of Enron. I know from the collapse of Barings how bad it was at Barings, but FTX seemed to have taken this to another level. What are the auditors doing? I know the crypto space is trying to keep away from regulation, but it needs some light touch regulation so that at least there are standards that everybody has to conform to. It appears, and like the verdict is still out on FTX, but it appears that it was the worst run company ever, certainly according to John Ray. And that's a high accolade, right? Because Barings was really bad. And I put my own incompetence and negligence very much at the fore of that. But that's a high accolade. In terms of derivatives, which I think was the second part of your question, look, leverage is always going to get you. Whatever you do in life, if you start to leverage anything, it will get out of control. And that's why you need regulation, you need good systems, you need good processes, and you need good people. And Bankman-Fried, in my opinion, surrounded himself with yes men, people who were never going to challenge him, were going to agree to everything that he did. And effectively, and there've been so many examples of that in business where leaders almost become dictators because they surround themselves by people who aren't going to challenge them and ask the difficult questions. And that was true to a certain extent at Barings. I think in this case it's going to be even more prevalent, but hopefully that answers your question.
Yeah, no, that's great. Let's go to...
Yeah, far too clever a question for me, to be honest. But look, I'm not massively into the crypto space. I don't trade cryptos. I do believe that, we'll move towards digital currency, and that will start to gather pace because, as you mentioned, there's a certain amount of terrorism funding that comes through all currency. And the only way to try and remove all of that is to do something that is, whether it's centralized, decentralized, that there needs to be some form of regulation over it. I think the crypto space is definitely moving towards something that's, well, I don't think a lot of people want anything, but I think they're going to have to accept something that's certainly light touch regulation in that sort of area. Who it comes down to and who controls that regulation, I don't know. I'm sure the SEC are going to come down very, very hard on the space where they can. And I think, you'll see a lot of that over the next few weeks and months as regards to the information and the cooperation that they get back from SBF. But yeah, I mean, for lots of different reasons, I think digital currencies is going to happen. Quite who's going to have that oversee of the regulation, I don't know. Again, it comes down to expertise. I mean, I'm sure that the UN has little to no expertise at the moment in that regard. And there must be somebody better that can take control of it, because if you don't have people who understand what's going on and are able to ask the right questions, it will ultimately fail. Just in relation to his parents and the whole law question, I have no idea and haven't necessarily seen the speculation that his parents may have some involvement or not. I think there's some interesting things at play at the moment. Obviously, he didn't give testimony to Congress last week, and I think there's reasons behind that. I think he's probably busy away, or his friends and family are busy away trying to do a deal with the SEC at the moment, or whoever is going to bring the cases against him. And I think there's potential for him to do a deal, which will be weird with the amount of money that's been lost. But I think that there are regulators, and the SEC probably being primary amongst them, that really want to get to grips with this space. I mean, the advertising that goes on, the way that people are drawn into this space by, the talk of unrealistic profits all the time, it's quite unsavory. It happens in lots of different spheres. And, I think, probably for the last 4 decades, regulators and central banks around the globe have spoken about different forms of mis-selling. For me, this is another classic example of people being mis-sold, misunderstanding risk, trading in a product that's not appropriate for them. But we just seem to go round on the same wheel all of the time. And, it's crypto. For me, it's crypto at the moment, but a few years ago, it was FX or credit default swaps. And, trading the thing that's most appropriate for you as an individual, I think, is key. And that's why I think we will continue to see a bit of a stamp down in this area. Like I say, your question was far too intelligent for me, and hopefully there's some way to answer.
Let's do another couple of questions and then we'll wrap up here.
Yeah, I don't, to be honest with you. It's not something I don't think it's something that's affected my day-to-day life, to be honest with you. I own property in Ireland, that's about it. But there are huge differences between certain jurisdictions, and that's always been very, very evident. I mean, like everything that I did in Indonesia was done with a brown paper bag. If we wanted a phone line, there was a 6-month wait, or there was a 6-minute wait. That was the choice. So you went the 6-minute wait and you put the amount of money that was required in the envelope, and you got the phone line 6 minutes later. So 100% there are different jurisdictions that do different things differently. And gearing towards, like in very simple terms for me, the more developed a market is, in my opinion, the more secure it will be. It'll have standards of practice, and those will be upheld and adhered to. So, I don't have any direct experience of China per se. I spent some time in India, and the last question had some mention of people in India as well. Yeah, things happen differently in different locations. And the more developed countries are, for safety reasons, are probably the ones that you veer towards. Unfortunately, what happens in a more developed country is all of the edge, the competitive advantage you might gain, has probably been sucked out of that marketplace already. So, the ones that are going to offer you more opportunity from a profit perspective are those ones that probably have slightly less bona fide credentials from a probity perspective. From a trust and integrity perspective, just talking about me personally and things that happened to me over that period, my honesty and integrity were tested very, very, like my basic honesty and integrity were tested very, very early on during that period. And, I'm not proud to say that I failed those tests. And, it's a small number of people that can get involved in a situation such as mine. 99.8% of people will do the right thing. I was just in that very, very small minority that didn't. And we can all give different reasons for why we didn't do the right thing. And, like, as I said, I speak around the globe, and the first thing that I always say to people is, you find yourself in a difficult situation, be that your finance, your health, your business, the most simple thing that you can do is ask for help and advice, because you're surrounded by people that can help you. I chose at the age of 25 not to do that. I thought I could cope with it, and I saw asking for help and advice as a sign of weakness, whereas really I should have seen it as trying to do the right thing and do things correctly. And unfortunately, I didn't do that. So, I have 3 children of my own these days, and, they're all told to ask for help and advice. You don't know everything, and I certainly didn't at that time, but I didn't do that really simple thing. I know that goes away a little bit from your question, but hopefully the early part of the answer dealt more with that.
Yeah, I think that's always good advice. Let's wrap up with a question. And again, if anybody is interested, please make sure you follow the Nick Leeson on Twitter here.
No, I don't think you are. I'll simplify it as much as I can. Certainly during my own case at Barings, which was back in 1995, I was the only person they could pin something on criminally. I took the trades. I manipulated the data that was coming across. I manipulated the financial reporting and committed fraud, right? So, everybody else around me within the organization that I worked for didn't necessarily do anything criminal. I always say that, and I've sat in a room with a few of these people since that time and had conversations with them. Because of the framework that existed at that time, the only crime that they were guilty of was being stupid. And they were completely stupid. They had no idea what was going on, and they weren't asking the right questions. I think where the framework has been supposed to change over the last 30, 40 years is that those leaders should be held accountable. But I think, my early career in the world of banking was always about how the banks were going to get around the rules. And they employed, floors full of lawyers, barristers, to work out ways that they can flout the rules. And I think they still do that to this day. So I think you're completely right. That the finger is always pointed at an individual or a small group of people. Those are the people that are ultimately punished, and it deflects from what's going wrong within the system and within some of those big organizations that are making those decisions. You look at FTX and some of the big crypto organizations that are out there at the moment, they've all got huge venture capital money in them, and they've all made those risk-adjusted decisions when they're making the investments. And, there's not a great deal of due diligence that goes on in that space. I think the issue is, and this is where I draw the similarity, is that you can't punish somebody unless you can prove that they committed a crime. And, as much as people often ask me, do you not get angry that nobody else went to jail with you at the same time? Apart from being criminally stupid, there wasn't a crime that you could have attached to them at that particular point. But you're 100% right. I don't think that you're getting involved in any sort of conspiracy theory, but there has to be a desire to prosecute and to identify, and that doesn't always happen in those corridors of power. I don't think, anyway.
Yeah, no, I think that's spot on. Maybe for the last couple of minutes here, Nick, this sounds like a sort of very cliche type of question, but if you were to go back in time, now that you're older, wiser, and have been on that, let's call it road to redemption, so to speak, what kind of advice would you give to your younger self? And it can't be as simple as don't do what you did, right? There's obviously something deeper there.
Yeah, it's a tough one. To be completely honest, Michael, it's not an avenue I go down, because I term that sort of stuff as wishful thinking, right? And I don't engage in that. I just deal with the facts, right? So, unfortunately, it did happen. I have to deal with it. I have to move forward, and I do that as well as I possibly could. In terms of advice, ask for help and advice is always number one. Number two is acting early. Again, it doesn't matter what walk of life or what thing is affecting you, whether it's your health, your business, or your finance. The earlier you act, the better it will be for you. I think those are the two key things. Whilst I was in prison in Singapore, I had colon cancer, and again, it was an emergency operation that I had to remove a tumor that was 10 centimeters by 7 centimeters. I collapsed and had to be operated on very, very quickly. And again, didn't act early enough in that regard, didn't have enough information or enough education at my disposal about cancer to deal with what was happening to my body at that time. From an organizational perspective, just to put a different spin on it, I think the most important thing is to challenge your employees, but at the same time, to support them and give them the skills and the education that they need to perform their roles as effectively as they can. And then, also, and this is number two from an organizational perspective, is provide the psychological safety that people can do that they can ask questions, they can raise their concerns. And it may be, going back to the asking help and advice, I always say to my own children, it may be that you've done something wrong and that I need to punish you, but it won't last forever. The quicker you're honest and completely open about what's happened, the better the solution. And I'm somebody that toiled with a situation that was ripping me apart for years. And, until you reach that situation where you have a long, hard look at yourself and you admit that you don't particularly like the way that you've become or the way that you acted during that period, you can't recover. And, and I have no sympathy or empathy with anybody that's involved in financial scandal. They know what they're doing. They know they shouldn't do it. They continue all the time, just as I did all of those years ago. And you have to accept the consequences of your actions. And, the quicker you get to that understanding, the better for you from a personal and mental health perspective. The longer Bankman-Fried goes on denying whatever his motivation, be that cooking up a deal with the SEC or whatever, it's really going to weigh on him. Blaming other people. Jerome Kerviel's the best one at that. It was the bank's fault. The bank have a part to play, but so do you, and so did I. I was the protagonist. I was the person who took all the trades. I was rightly punished, rightly convicted, rightly sent to prison for a period of time. But the organisation was exceptionally poorly run. There were no systems and controls, and the bank should have been, if the bank was still around, it should have been reprimanded and something should have happened, which was, as the previous caller said, fines are a waste of time. I don't know how many fines JP Morgan have paid over the last 5 years, but I'd say it runs into billions of dollars, because the fines are getting bigger, but the behavior, the conduct, I think is improving. And I think, with each generation, the conduct improves more than it's done with the last generation, but it still has a way to go. And unfortunately, and this, I'm a little bit sinister or in this regard, I think the industry corrupts. Although I'm told that the latest generation, I don't know what they are. They're not millennials, are they Generation X or Z or whatever? I don't know, but there is, I'm told, and I can't prove this to you, but in the world of banking, they're making more informed decisions based on what the intentions of the organization are, as opposed to, looking for top dollar all of the time. I don't know. Like I say, I'm a little bit skeptical in that regard.
Everybody, thank you for joining. Again, this will be an edited podcast under Lead Lag Live. Hopefully everybody enjoyed the conversation. Nick, really do appreciate you spending the hour with us. Your forthrightness, your openness, the pearls of wisdom here, I think, are definitely worthwhile. Thank you, everybody. And if I don't get to see you tomorrow, enjoy the rest of the weekend, everybody. Cheers.